The Rebel Capitalist Show.
All right, guys, it gives me a great deal of pleasure to welcome someone back to the Rebel Capitalist Show. He is a good buddy of mine. He is a superstar on FinTwit. His name is Brent Johnson. Brent, welcome back to the Rebel Capitalist Show, my friend.
Happy to be back. Hey, everybody. Nice to see you.
And I see you've got an amazing robe again. You want to walk us through that? I mean, that's the most important thing.
I went with the red robe today rather than the green robe like last time. I'll tell you what, it wasn't an accident that I wore this sweater today. Let me put it that way.
All right, very cool. We'll let FinTwit play with that for a while. So right off the bat, let's go ahead and probably talk about the dollar. That's what you're most well known for. It's been down a little bit. I did a video last night where
I saw it. I watched it.
You know, the main point there was, and I think some people took it the wrong way, is that the dollar's only down 10% in the last 5 years. So I don't know that I'd call it a crash. But what people should really be focusing on is how much the dollar is down against everything else, like gold, real estate, stocks, Bitcoin. And you know what my first question was, kind of curveball for you. I was thinking, okay, if the dollar, well, let me put it to you this way. If we have a global commodity that's used by 80% of, let's say, corporations and global business, and it's down 40% against gold, 99% against Bitcoin, 50% against stocks, I mean, is there an argument that it's cheap? Because, you know, we like to buy things when they're cheap and sell them when they're expensive. And I don't know. What do you think about that?
Well, I think you know what my answer will be on this is that I think that there is a fundamental case for the argue that the dollar is undervalued. And I know that I'm in the minority. All you have to do is look at the chart to know that I'm in the minority on this. You know, the dollar is not a pretty chart right now. You know, I was looking pretty smart back in March, and I'm not looking so smart today. You know, but I still believe that this is all set for a major reversal. Now, I have, you know, my argument has never been one of perfect timing. The idea that I can call this perfectly and time it perfectly, I would never make that claim. But what I know is that the table is set for a crisis. And I also know that whenever there's a crisis, until they completely change the system, whenever there's a crisis, the dollar rises. And I think you could make an argument that the dollar could rise precipitously. And if that happens, it doesn't take the dollar to have to rise that much for really bad things to happen. The dollar was up 3 or 4% from January 1st to March 20th. And it caused global havoc, right?
Yeah.
So, you know, bad things happen when the dollar rises. And I would argue that the central banks and the monetary authorities aren't at quite as in much control as the market seems to think that they are. You know, I threw a couple of slides your way. The very first slide, you know, and you can share these with your listeners, is it basically just shows, and listen, you can take this back further, but I basically just took it back to, you know, to 1995, call it.
Mm-hmm.
And because that's about 25 years. Every time the global economy has either slowed or there's a crisis, the dollar rises. And it makes sense because whether you like it or not, whether you think it's appropriate or not, whether you love the dollar or hate the dollar, it doesn't really matter. The global monetary system is on a US dollar standard. You know, 100 years ago, we were on a gold standard, and now we're on a dollar standard. Now that may change someday, but as of right now, we're on a dollar standard. And it makes sense when there's a global credit contraction or some kind of a crisis, people have to scramble for the underlying collateral of the system. And that underlying collateral is the dollar. So again, you know, I am of the opinion that the monetary authorities and the central banks aren't in as much control as everyone seems to think they are. I'm of the opinion that this global reflation trade is not as certain as the market thinks it is. And I'm absolutely sure that at some point in the future, we're going to have another crisis or another global slowdown. Now, whether that's next month or next year or 2 years, I don't know. All I know is that the table is set for a big crisis. And I believe when it happens, the dollar will go up a lot higher. I don't think it will be different next time. You know, to say that the dollar is going to go down in the next crisis would be to throw out the last 25 years of history. Now, is it possible I'm wrong? Of course it's possible. It's possible it will be different next time. I don't think it will be.
So, couple questions. Number one, I understand how much pressure this adds to global corporations and countries who just went on a binge of dollar denominated borrowing back in, let's call it 2011, 2012. When the dollar gets up to 100 or 110 on the DXY, how much pressure is actually relieved, if any, when the dollar is down at maybe 90, let's say, at these levels? Is there any pressure that's released?
Well, there's definitely pressure relieved, but there's not pressure extinguished unless those entities who owe those dollars take the opportunity of dollar weakness to pay off the dollar loans and then not reissue them. But that's not happening.
Because
they're not paying off.
No problem.
Right. They're not paying off the dollar loans. They're actually taking out more loans. And there's several global entities that are actually issuing. This is the thing, because everybody needs dollars. If you borrow in dollars, you get a better rate. And if you believe the dollar is going to fall, you can borrow in dollars and pay it off at a lower price. And that's what they've done for the last 12 years, right? And that's why when the dollar rose, it became a problem. So now that it's falling again, rather than taking that opportunity of it falling to get out from underneath this pressure of the dollar, they're doubling down. They're issuing more dollar bonds. Somewhere in here, I have a slide. I think
that was one of my questions for you, Brent, because last night I did a video and kind of the conclusion is just for a very simple way of determining if the dollar is losing its global reserve currency status is just to look at how much dollar denominated debt exists in the world as a percentage of total global debt. And if that's continuing to rise, then the dollar isn't losing its reserve status. If it's going down significantly and very quickly, well, maybe it is. That's kind of a tell. But my chart only went to 2018, and so I think around at that time, according to the chart I had, the global debt denominated in dollars was about 12 trillion. Where is it now? I assume it's higher, but I wanted to ask you.
Well, it's very hard to say because it's very hard to measure, and the reason it's very hard to measure is because, and this is where it all gets very intertwined and opaque and hard to measure, because we have the U.S. dollar market and we have the offshore Eurodollar market. There's two dollar markets. There's a domestic dollar market and there's the international dollar market. Because the Fed does not have jurisdiction over the Eurodollar market, they can't force firms to report their holdings or their exposures, So there's no real way to measure all the different dollar credit that has been extended in the Eurodollar system. There's been estimates, and I think the number you're quoting is the bank debt or whatever issued outside the U.S. in dollars by the Bureau of International Settlements or Bank of International Settlements. But then there's other estimates that have it twice that high, and there's other estimates that have it 3 times that high once you start factoring in the shadow banks and the non-financial institutions and that have extended credit of some kind.
Right.
The bottom line is the Eurodollar market is bigger than the U.S. market. And so there's a lot of demand for dollars out there just to service the debt. Now, to your point, I will say, I understand the point that you were making in your thing last night. I actually disagree with it, but it doesn't mean I'm right.
No, Brent, you're a pro, buddy. I'm just an amateur trying to figure it out. So where do you disagree?
Well, I think it's this big catch-22, right? And my point is that until there's a suitable replacement to the U.S. dollar and the U.S. dollar payment system, you're in this catch-22, whereas if you don't continue to issue dollar debt and you don't continue to extend credit, then less dollars flow. So in other words, if you start to pay down that dollar debt, it's actually deflationary. There's less dollars in the system. But let's say if you stop issuing new debt in dollars, the first step is not to start paying them off. The first step is just to stop growing, right? Well, the problem is when you have a debt-based monetary system, the system has to grow or it crashes. It's just math. And so it's very hard to stop extending US dollar credit without it leading to a US dollar credit contraction. But let's say that you can. Let's say that we just stop growing and then we start paying. Once we stop growing, then less dollars are circulating. And if we actually start to contract a little bit, yeah, and you start to pay off some of that debt, it's actually deflationary, which means there's less dollars in the system to then service the rest of the debt that does exist.
All right. So demand for dollars goes up.
So demand for dollars goes up in the short term, right? And so and that's why I think this idea that de-dollarization is dollar negative in the long term, yes, it is, but in the short term, it has this contrary effect of actually causing less dollar supply, and therefore in the short term the dollar can rise. And that's kind of the point that I try to make. Listen, the dollar is going to go down significantly at some point. We are going to leave the dollar as the global reserve currency at some point. But it just doesn't happen the way many people think it happens. And I think the tell that it's coming is not the dollar falling. If the dollar falls, everything works. The system currently works. The dollar falling is the central banks winning, right? So if you think if you're bearish on central banks, you should be long the dollar because that's the last thing they want. And my point is like the signal that the dollar is losing reserve currency status is not at falling, it's spiking. Because if it spikes, they're going to have to reset the whole system.
Right. So, but those things could happen simultaneously, I guess. We could see dollar-denominated debt go down,
yes.
The dollar spiking, and then
Absolutely.
that kind of being a tell in and of itself.
If and when that happens, I will be selling my dollars and I'll be buying everything else.
Huh. Yeah, that's interesting. So, a couple questions. Number one is, I understand when the debt is being reduced, or there's not being, let's see, if dollar-denominated debt isn't being extended, then that has the tendency to create more demand for dollars. I get that. Does velocity have anything to do with that?
Sure, because I mean, velocity essentially comes from lending. And if you don't have lending, you're never going to get this runaway inflation that everybody's constantly predicting.
So it still goes back to creating the loans in the first place.
Exactly. I mean, okay. And this is important. This is really important. There's two different kinds of debt. There's bank debt and there's securitized debt. And securitized debt just recycles and redistributes dollars that already exist. If you issue, if GE issues a bond and they're borrowing dollars from the market, the dollars that already exist, right?
Right. Yep.
But if GE goes and borrows money, and they said, but if the GE goes to a bank and borrows money, and a bank extends them credit, the bank is creating new money.
Right.
That's new money that's going into the system. It's additive, and so securitized debt can go up a lot, and it doesn't increase the money supply. Bank debt increases the money supply. That has the potential, and if they continue increase it, and people are borrowing because the economy is growing, that's where you get these inflationary effects because they're increasing the money supply, and the money that's being increased is increasing in velocity, if that's the right way, or it's moving around more frequently. I give it to you, you go buy a refrigerator, the guy that sold you a refrigerator takes his daughter out and they buy ice cream, and then the ice cream store takes it and they go on a vacation. That's the economy like really humming. But when everybody's just kind of locked down sitting at home, watching Netflix, the velocity is pretty low.
Right. So let's go back to what you were saying earlier with this first chart, where over the past 25 years, when we get a crisis, the dollar spikes. What crisis do you see coming down the pipeline here? And I'm not saying, next 2 months, but, what are the biggest risks for a crisis, and what might it look like in your mind?
So it's, first of all, I don't know. And I've always said this from the beginning. It's not that I know what crisis is coming. All I know is that the table is set. So if a crisis does come, I think that the dollar is really going to spike. And I think because we're kind of getting towards the end of this debt super cycle, right? There's these mini debt cycles, and then there's the really big super debt cycle. And first you have the borrowings on the individual's balance sheet, and then it gets bumped up to the corporate balance sheets, and then it gets to the central banks, and then it's at the countries, right? And so it's reached kind of the apex of the ability to borrow. It's up to the biggest boys now, and so that's why I'm saying we're getting towards the end of this debt super cycle. And the more debt that there is, more money has to go to service that debt. That's naturally deflationary because you can't use the money to be put towards productive endeavors. And I think we've reached the point where we're going to have, even if we just have a general global slowdown, as opposed to a crisis, the slowdown, because the debts have gotten so big, the slowdown can itself cause the crisis. So I don't know whether we're going to have some kind of an economic event which causes the dollar to spike, or we just have this general slowdown, and as a result, the dollar goes up, and the dollar going up causes the crisis. Again, when I look at this chart, I don't know whether the dollar is reacting to the crisis or whether the dollar is causing the crisis. All I know is that they're 100% correlated. And so I think that the next time we do have a crisis, whatever it is, my guess would be it's some kind of a banking system issue in either Europe or China. If I had to guess what the trigger for the next crisis is, because I think that their banking systems are much more levered than ours. I think their economies are in more trouble than ours. And so I think that is where the next crisis will start. And listen, I could be wrong. I don't know for sure, but that would, if I had to guess, that would be my guess.
Okay, let's talk about China's central bank digital currency that they rolled out. It's I've got it written down here, the DCEP. It's basically the digital yuan. And I did a video on it yesterday. It'll be out tomorrow night. And I kind of tried to think through this. And the more I thought it through, the more I kind of had a light bulb moment and thought, you know what? Not short term, but long term, this could really cause some problems for a couple different groups. Number one, the U.S. dollar and the reserve currency and the infrastructure, because it's all about the infrastructure, not necessarily the green pieces of paper. And then also for Bitcoin. And I want to be very clear. I'm very bullish on Bitcoin, on the price. I think short term there's a lot of emotion. Let's say
just a little bit, a little bit,
to say the least. But long term, philosophically, I am all about Bitcoin. I want it to succeed. But when I look at the network effect that the Chinese digital currency could have, unfortunately, I think it could really give not only the dollar, but Bitcoin a run for its money. And so I want to get your thoughts on that, and then maybe I'll expand on my whiteboard video.
Well, can you tell me why you think that? Why do you think that this is, what's so revolutionary about it, or what's the infrastructure, or why do you think this could be disruptive? And then maybe I can answer the question a little bit better.
Okay. So first and foremost, the central bank has an infinite balance sheet. Any central bank. So they can extend credit. So if everyone has a bank account with the PBOC or the Fed for that matter, and people I think get hyper focused on just the Chinese citizens or just Americans having an account with the Fed. But I don't see why there would be any reason why all of these countries they do business with in Africa or South America or on this kind of One Belt, One Road initiative couldn't download the PBOC app and have an account with the PBOC, and you're kind of cutting out the commercial banking system and allowing the PBOC to create their version of bank reserves and turn those into legal tender. And we're talking stimulus maybe, or even extending credit to corporations in Africa. So if you're an African corporation and you've got the choice, and you've seen what's happened recently with the swap lines and the dollar shortage and that bottleneck. And as you know, it's not just about the Fed setting up a swap line. Well, it's still about the commercial banks. They still have to extend those loans. And if you're a corporation, say, okay, well, the next time I get into a problem, we have the next cerveza sickness, I don't have to rely on the commercial banking system and the Fed, because the PBOC can give me the liquidity I need directly. And they have an infinite balance sheet. They can take, they can have negative equity. They can take a haircut. So it's a completely different type of system. Then also you have the demographics in South America and in Africa being very, very young. So if they start to adopt the digital yuan as a payment system, just going back and forth on their cell phones, then you have that network effect. So you've got cheap credit, you've got the flaws with the dollar system and the commercial banking system in their eyes. These are their words, not mine. And so I think that could add to that network effect to give them a big head start. And then you combine that with all their foreign direct investment, with all these emerging markets and the One Belt, One Road. And I think, you could have that Facebook network effect with, India, Eastern Europe, the Middle East, Africa, South America, and China.
Yeah. So I tend to agree with everything you've said. It's all about the distribution system as opposed to, whether it's digital or whether it's not, right? I mean, currency is largely digital already, right? Not too many people actually walk around and pay their bills, at least not big bills with physical currency. So the digital aspect of it is, to me, is not that revolutionary, but the distribution system, having the account directly with the central bank, that's the revolution, quote unquote. But what I would say is, not to say that you're wrong, because I think you're right. If enough people were to adopt that, enough countries or people or individual corporations were to adopt that, they could certainly do it. But you have to remember that this would be done in yuan. It wouldn't be done in dollars.
Right.
The PBOC is not issuing dollar credit through their central bank digital currency, right?
Yep.
And so all of these people that are adopting it would have to accept the fact that they're going to be compensated in yuan. And I just don't think that people and corporations and countries around the world want yuan. The only place you can use it is in China. Now, China is becoming increasingly important. It's it's a huge economy and but I don't see people rushing out to redenominate their contracts and their payments into yuan rather than dollars. And I don't see foreigners rushing to sell their product to the Chinese in yuan rather than dollars. The reason they want dollars is because they can use dollars anywhere in the world. They can't use yuan anywhere except for China.
Right.
And this is why it's so hard to unseat the global reserve currency. Forget whether the dollar is the global reserve. Forget about the United States. It doesn't really matter. It's just very hard to unseat whatever the global reserve currency is because of the network effects that you're talking about. It's very hard for one network to take on another net. The first mover advantage is huge, right?
Yeah, right.
The other thing I would say, this is where I think it gets really interesting. And when I talk to people about these digital currencies and the Fed dollar and the Eurodollar and the Chinese digital yuan, is it's often brought up in the context of this is another MMT program. It's the marriage of the Fed and the Treasury, and they're just going to use this to get the money to the people. We're going to have high levels of inflation, and the dollar's going to go to zero. Now, when the Fed does it, it's viewed as a negative and the dollar's going to zero. But when China does it, it's this revolutionary thing that's going to allow them to take over the world. Now, it's the same thing. Why is it a positive for China but a negative for the United States? In other words, I guess I would say is if people start to adopt this Chinese digital yuan,
yeah, right,
they don't have a monopoly on that technology. A few months later, Powell comes out and Yellen come out with the digital dollar, and they have the. So why wouldn't that allow them to reinforce the dollar as the global reserve standard or global reserve currency and just push the Chinese digital yuan to the side again?
I think you could have this competition going back and forth, and what network prevails.
Yeah,
I don't know. Obviously, the dollar in its current form has a huge head start. Yeah. But going back to what you're saying about MMT, that's how I kind of saw it as whichever central bank wins, if a central bank does win, they can do MMT throughout the globe. And if this is a big if the MMTers are right in the sense that as long as you increase productivity along with the increase in the money supply, you won't have inflation because you'll be creating just as many goods and services to keep up with the increase in the money supply. Now, that's the trick, of course. But if you can do MMT in Africa, in South America with your yuan or with dollars, then you could see this type of MMT nirvana let's say, where global growth is being increased while at the same time the digital currency is being increased as well with the supply.
Listen, I already know how this is going to be received, and I know people are going to laugh and they're going to say, "Oh, geez, here goes Brent again." But that's kind of part of my milkshake argument. We're going to get MMT in the United States. We're going to get this digital currency in the United States. You and I, everybody, we're all going to have accounts with the Fed. Now, whether that's 6 months from now or 2 years from now, I don't know, but that's coming down the pike.
Yeah, I agree.
To think that's not coming, you've got your head in the sand. And so I'll go back. If this is such a revolutionary, great thing for China, and it's going to be positive for them, well, why can't it be a positive for us? And if it does lead to this short-term sugar high, this monetary nirvana where, you're increasing the money supply, but productivity is going up even more, we can get this great growth. And if the U.S. kind of takes off as a result and everybody needs dollars anyway, and well, wow, why don't I just go invest in the United States? They're doing a $10 trillion infrastructure product. They've got Facebook and Google and all these other great companies I can buy into. And, I want to go invest in that. Well, I got to have dollars to buy. I got to have dollars to invest in that. And that's where I think it's possible. And again, I don't know that this is going to play out, but that's part of my theory is that I think it's possible that we get into this scenario where the U.S. is outgrowing the rest of the world. And as a result, it creates this vicious cycle or this vicious circle where it pulls even more capital in. And the other thing I want to say about the whole global reserve currency thing, and again, I know how this is going to be received, and this is not necessarily something that I like, but it's just reality. I think a lot of times when people talk about the global reserve currency, they think of it from an economic perspective, right? And it definitely is. That's a very important way to look at it. But the political reality of it, and the global reserve currency is not about economics. It's about power and the ability to extend power around the world and to force relations on your own terms. And as long as the United States is the global hegemon and the biggest power in the world, we are not going to lose the global reserve currency unless we want to, unless we choose to do it. And if you can find anywhere in history where somebody has willingly given up the global reserve currency, where it was given away rather than taken, then I'll buy you a beer. But I can't find anywhere in history where anyone has willingly given up that power, because it's an incredible tool, right? And so, I've heard these arguments, well, it's no longer in the United States' best interest to have the global reserve currency. It's not necessarily this advantage. It's actually a burden. Well, maybe from an economic standpoint, but from a political standpoint, it is not. And from an ability to project power around the world standpoint, it is not. And so, I'm not, and then people say, well, the U.S. hasn't won a war in 50 years and we're a declining empire. And, I would suggest if you think that the United States is a declining empire, I wouldn't argue too much. But if you think that we can't win a war, I would suggest going and asking some of these countries that we fought over the last 50 years and the family members of the foreign soldiers who've died, whether or not the U.S. has any power and has the ability to wage war, right? And again, I don't like this. I don't prefer that but this is reality. Just look at all the different countries over the last 25 years who have, in one way or another, tried to challenge the U.S. dollar hegemony, or tried to price their oil in something other than dollars, or tried to issue some kind of a new currency or create a new currency block. And those leaders just don't exist anymore. They're gone. And I don't like it, but that's reality, right? And I think that's something to consider when you consider the loss of the global reserve currency status.
So we've talked about the digital yuan, we've talked about the digital dollar, and I want to be very clear. I'm not saying that, I'm not giving a prediction. These are just kind of thinking things through, thought experiments for me. Now let's talk about Bitcoin, because the argument there is going to be that Bitcoin is this Trojan horse, and it's like this digital cockroach type of thing, but it's going to spread. The people are going to start using it because it's so superior, and it's going to be under the nose of, let's say, the central banks and the politicians. And before they know it, before the central planners know it, Bitcoin will have such a stronghold in daily commerce or as a store of value. So many people will be using it that it's going to be impossible to get rid of, and then it's going to render the political powers impotent because they no longer have control over the money supply, over the currency supply, let's say, because Bitcoin has taken it out in the shadows, so to speak, without them even knowing it. So how do you think through that?
Well, I think it's possible, but extremely unlikely, I guess is the right way to say it. I understand that view. I think it's possible. I personally think that would be fantastic if somehow the people could choose their own currency and governments around the world would allow a competing currency to compete with their sovereign issued currency. And the idea that we can go against what the government wants and just have this free market is beautiful. I love it. Right? I think it's very unlikely. I don't think in this regard that Bitcoin has been tested yet. And I know there's a lot of these Bitcoin maximalists. And listen, I don't think Bitcoin's going away. I don't think digital currencies are going away. And I think that Bitcoin has enough of, again, first mover advantage, network effect. I'm kind of a Bitcoin maximalist in that sense. But there's some big disadvantage to being the first mover as well, is because if the central banks or if the governments want to send a message, the way you do it is you take a swing at the biggest guy and scare the hell out of everybody, right? And we have not had a big scare in the Bitcoin world from a government yet. We haven't had anybody outlaw it or throw anybody in jail over it. We've had people go to jail for fraud or for selling something illegal using Bitcoin, but not just for owning Bitcoin itself, right? And they've started to put some regulations in place, and then people say, well, you don't regulate something that you're planning to outlaw, so this shows that they're being acceptable, and there's some truth to that. But to the extent that ever actually starts to threaten the currency that they issue themselves, I don't think that they're just going to sit back and not fight it. Now, perhaps when the governments then do fight it, maybe Bitcoin will win. I doubt it, but it's possible. But my point is, they're not just going to sit by and give up the sovereign currencies. And then people say, well, if one country outlaws it, then it will become more popular in another country. Game theory, then they'll adopt it. Right. Well, that same thing exists with gold, right? If the United States outlaws gold, well, gold probably becomes more valuable in Brazil or China or wherever it is. So this is not something that's unique to Bitcoin. Again, I think it's a beautiful concept. To me, it's not political reality.
What do you think about the argument? And I talked to Raul about this, and I think Preston would probably agree, where if you have all of this institutional adoption of Bitcoin, let's say all these pension funds now own Bitcoin, and therefore the teachers unions and the police unions, et cetera, does that make it a lot less likely for the government to come in and try to make it illegal? Yeah. Well, and this is
gold or Bitcoin can go to $1 million per Bitcoin and still not be the official currency of the United States, right? Yeah. I'm not saying that Bitcoin's not going to go up several times. I think it probably will. I'm just saying the idea that it's going to become the currency of the realm is, in my opinion, not well thought through. And, I was talking to somebody the other day. Actually, it might have been Preston. I can't remember now. But I got into it with some people about Bitcoin a week ago. It actually was. It was Preston because, we kind of got at each other a little bit and then we talked about it and it was all fine. But during that discussion, had all these, these Bitcoin people just coming at me. And
I know the feeling, buddy.
And they're selling their houses in order to buy Bitcoin, and they're 100 and 50% exposure.
Credit cards, Brent.
That's what I'm saying. 50% exposure to Bitcoin isn't enough. You need to have 99.9% of your money in Bitcoin. And what I was saying is, these people are crazy, but they're also revolutionaries, and most revolutionaries are crazy. Most revolutions don't succeed, but occasionally they do. So maybe they will succeed. But to be a true believer, you've got to throw caution to the wind and be willing to die for your cause. And by all the accounts that I can see, some of these people are willing to die for their cause because they're betting it all, on Bitcoin going higher.
They're betting it all and some on leverage. I think the way I see it in my mind is just a matter of probabilities. And I think the probabilities of Bitcoin going to, let's say, 100,000 in the next 5 years is a lot higher than the probability of Bitcoin becoming global money and
Right.
it taking out all fiat currencies. That probability is a lot lower in my mind for a lot of the reasons we discussed.
Yeah.
But both those things, they're not. Bitcoin doesn't have to be global money in order for it to go to 100,000. Those two things are completely separate.
Yeah, it could just be a store of value, right? It could just be a store of value and something that can be used for an easily transferable form of collateral, however you want to, define it. It can be a fantastic asset and still not be money.
Yeah.
Yeah.
How do you determine as a professional when things are overbought from a psychological standpoint, not necessarily a chart, but because I always think about that, and I'm someone that I really enjoy investing and buying things that everyone else hates or doesn't even know about. Like I use the example of coal. Like coal doesn't have cyber hornets, right? There's no coal cyber hornets out there on Twitter or tobacco or something like that.
Yeah.
I like investing in those types of things, and I don't want to, throw stones at those guys. And obviously, they're very passionate about what they believe in, and more power to them. But I just get a little hesitant short term when I see so many people on one side of the boat, or you turn on CNBC and every single commercial is on, let's say, Grayscale or some, Bitcoin. Every single person on there, they're asking about Bitcoin. I just short term, I get a little hesitant there. So from a professional standpoint, how do you see that the psychology playing into it short term?
Yeah. So this is probably a good point to just to reiterate, either for people who haven't heard me speak before or who have forgotten this, is kind of what it is that I actually do, right? And what I do is I manage overall portfolios for a number of high net worth investors, for lack of a better word. And as part of that, I run a fund that is trying to play these asymmetric opportunities of a potentially spiking dollar. That allocation to that fund that's doing these asymmetric opportunities is a small portion of an overall diversified portfolio. But my job is to not only try to make money, but to look for potential pitfalls and potentially protect against it. That's the risk management part of the portfolio, right? And I think that this is a way to take a relatively small percent of the portfolio and place them what I think are asymmetric opportunities, because I think the probabilities is higher than the market is pricing in, right?
Right.
And so that's what that is. And so to your point of how do you manage those risks is when everything is jubilant, that's not even a word.
Let's go with it, man. Sounds good. I like it.
When everything is euphoric, maybe that's the right way to say, that's when I start looking for the downside. And when everything is hated, that's when I start looking for the downside. The point is right now, and I have a number of slides that I sent that kind of lay this out. It relates to the dollar and a number of different markets, but the bottom line is the whole world is in one trade right now, and it's the global reflation trade. If you look at a number of these different sentiment indicators, and let's start with the dollar, and then we'll go to some of these other.
Yeah, do you have markets. A chart here that we could click on?
Well, let's just start on slide 7. It's basically just a long-term chart of the dollar, and it basically shows that the dollar's just gone straight down for the last 7 or 8 months, and now it's approaching kind of multi-year support. And this is technical support. Now, on its own, this doesn't mean a whole lot, right? And maybe it hits that support zone and bounces. Maybe it breaks that support zone. If it breaks that support zone, then it probably heads to 85 pretty quickly. But my point is, this is just one indicator where I look to see what's the trend is clearly down, right? And we're approaching an area where you could get a bounce. And then the next slide 8, this shows the relative strength of the dollar over the last 12 years. And you can see that on a monthly basis, the dollar is at the lowest relative strength of the last 12 years. Now, that doesn't mean, taken on its own, this doesn't mean that much. It just means the dollar's weak and trending lower. but it's it's getting low. Then if we go to the next slide, this is daily sentiment. This is slide 9.
Got it.
This goes back 30 years, and basically, 0 is really low sentiment, 100 is really high sentiment, and over the last 30 years, which is about 11,000 days, last week we had a reading of 9, and in the last 11,000 days, we've only had 246 lower readings. So last week, the sentiment on the dollar was in the lowest, 2.5% of all readings over the last 30 years. So we're starting now, again, taken on its own, just means the dollar's weak. But when you start adding all these different things up, right, you're starting to see that perhaps this is oversold. You go to the next slide, and this is the short position on the dollar. We have never had the speculators who are, the betting that the dollar is going to go lower has never been higher. So again, more evidence that, the consensus is for the dollar to continue down. And maybe it will. Again, I'm not posting these because these are a guarantee that we're going to have a reversal. I'm just building the case for why I start to think about things differently. If you go to the next slide, this shows the dollar versus the commercials. Now, the commercials, these are the big banks and the big players that take the opposite bet of the speculators. Well, they've never been more long. And over the last 12 years, whenever they've gotten to this level, or, we're at the highs, but whenever we've gotten to a similar level, it's led to a subsequent dollar rally. Now, again, is it going to be different this time? Maybe, but I'm willing to bet that it's not, because the asymmetry associated with it is pretty high. So it's a way to take a small percent of your portfolio and potentially make an outsized gain. If I take this on even further, you go to the next slide. This is slide 12, and this is the speculative positioning in the euro. Now, it's not at its all-time high, but it's pretty close. Again, people are short the dollar, long the euro. Next slide is the yen. Same thing. Not at its all-time high, but pretty close to it, and certainly at the high end of its traditional range.
Right.
Then if you go to the next slide, and I'm sorry to just go, I'm trying to do this to kind of help answer your question, right?
No, this is great.
You go to slide 14. Now, this is the equity market. This is the call option volume on the equity market has just gone exponential. Now, that doesn't mean that the market's going to crash, but the point is that there's a lot of people that believe it's going to go higher because they're buying call options, right?
Man, and I just want to point out real quick, this chart goes all the way back to it's like 1990.
Right. And there's anyway, you go to the next slide, slide 15. This is the trader position in an oil. Now, it's not at its all-time high, but it's pretty close. And and if you look at this is the speculators. Again, if I were to take the inverse of this and take a look at the commercials, these are the guys that actually use the commodity and the big banks that are representing them. They are short over 500,000 contracts of oil, which tells me the guys that work in the industry that know it a lot better than I do are more than happy to sell oil at these prices. Again, they're short the dollar and they're long oil. Then go to the next slide. Next slide is copper. The speculative positioning in copper has never been higher. Everybody is all in on this global reflation trade. Now, maybe they're right. Maybe we are going to have a huge global boom. And if that's the case, then copper will continue higher. But my point is you're at the euphoric level in the trader's positioning.
Right.
And if you go to the next slide, and there's just a couple more here. You go to the next slide. This is the 30-year treasury. You've got the speculators have never been more short 30-year treasury. So they're basically betting that inflation is going to pick up and interest rates are going to rise. Now, is that possible? Of course it's possible. But my point is it's all one trade, right? It's all short the dollar, long risk assets. You go to the next slide, and this is even the people that are doing the trading are admitting that they are taking as much risk now as at any time in the last 20 years. And I sit here and I think that the market is much riskier and much more uncertain than any time in the last 20 years. But the market participants are taking more risk than at any time in the other year. So I keep getting all these factors that tell me that we're kind of loaded to one side of the boat, right? And then if you actually go, I actually kind of even put put a position here on slide 21. I just show this boat, and that's what I'm saying. Like, everybody's on one side of the boat. It doesn't mean, it doesn't mean that they're wrong, but to argue that everybody's not on the same side of the boat is, in my opinion, a bit naive. I mean, markets are euphoric and they're at their highs. And
the contrarian play short term definitely is dollar.
And this is my point. The asymmetry may not show up, but the asymmetry is not to the upside from here. The asymmetry is to the downside. And so when you get to these severe inflection points or these extremes, to me, that's when you need to start thinking about protecting against reversals and potentially trying to profit from reversals. Again, I don't know whether this dollar crisis is going to show up, next week, next month, or next year. I'm convinced it's going to show up. And I think everybody's positioned for the exact opposite. So when it does, I think the move could be rather explosive. And if it doesn't, then the rest of client portfolios are going to be just fine and more than make up for any losses on the asymmetry.
Brent, what's the typical time frame on these these indicators that you just went through? Is this like generally they reverse in a month, in 6 months? Or I think that's important for people to understand, because that's something that's often overlooked.
Well, I don't think there's any rule that says, some of these are monthly charts, some of them are weekly, some of them are again, I'm just trying to build, a number of different indicators that I can use to kind of build an overall picture of the market. Right. What I would say is, inevitable, you always hear this, inevitable is not the same thing as imminent. Right. And that's why I say I've never told anybody to sell everything you own and go buy call options on the dollar. That would be ridiculous. Right. And that would be extremely poor risk management. And, I'm in the risk management business as much as I am in the portfolio growth business. I don't know how to time this perfectly. What I do know is if you size your position appropriately at the beginning and you have a time horizon that's not a few weeks, and my time horizon on this whole thing is 2 to 4 years. I think it could play out as soon as 2 years, but I think it might take as long as 4. And I've sized the trade appropriately from the beginning. And as such, I can withstand any kind of drawdown that comes my way. The way I think about it, and I think sometimes people miss this, is, people have been sitting in uranium for 7 or 8 years because they know it's not an if question, it's a when. There's going to come a time where uranium is going to break out. And the upside is so big, it's okay to put 5% of your portfolio in there and just wait, right? Same thing with the gold miners. People held on to gold miners for 7 or 8 years, despite being down 70 or 80%. And they did it because they know when the turn comes, the opportunity is extremely high to the upside, right? And so they're willing to put a portion of their portfolio in this, and maybe they're willing to accept that drawdown in the short term for the big gain in the long term. It's the same thing here. It's just that I think that the upside is more certain than some of these others. And it goes back to that initial slide that I showed you. I believe that there will be another crisis. And I believe that when that crisis show up, the dollar is going to go higher. And as such, I'm willing to take a portion of my portfolio and make some asymmetric bets that will pay off if and when that happens.
What about stocks, Brent? Yeah. Because I know that, I don't know, maybe the first time I interviewed you is probably, I don't know, maybe 8 months ago or something like that. Yeah. I think you were bullish on U.S. stocks, just not because you liked the fundamentals, but you thought that all this capital would flow into the United States and go into risk assets. What's your view on that now?
Well, so, it's funny. For me this year, it's been kind of a tale of two markets. The first half of the year, I called it about as good as I ever have. And the second half, I've just kind of been wrong. I mean, there's just really no other way to say it. I've been long in client portfolios. I've been long equities for years and years. So my clients always have exposure to equities. We were hedged at the early part of the year, did pretty well down through March. We pulled our hedges almost at the bottom, and we got long. Actually, I bought some call options, at the bottom. We were expecting a rebound. We got it. But where I messed up is, I thought we'd get a pretty good strong bounce, but then I thought we'd roll back over and retest the lows. And so, we started hedging portfolios again in June. That was not such a smart idea in hindsight, right? So we've still made money. Equities have still gone up, but the hedges, have obviously been a drag on the portfolio. But overall portfolios have done well because, we've got a mixture of basket of assets and we have long time horizons. And so,
but just where do you see the
equities
S&P
right
with,
now,
with what's going on with Tesla, and DoorDash, and Airbnb?
That's where I'm going with this is I am of the opinion that over the next couple of years, equities are going to go much higher. But I think in the short term, and again, this doesn't mean tomorrow, but I think before we do that, we're going to have another downturn in equities. I don't know if we'll go back as low as we did in March. I think that's probably unlikely. But I could see us go back to 25,000 on the Dow. That wouldn't shock me at all. Maybe we go a little bit higher and then pull back to 28,000. I think that there's going to be another quote unquote shaking of the tree in equities, so to speak.
Yeah.
I think that we'll have another pullback. To me, everything's euphoric right now. I don't think that that's going to continue. But after we have that, pullback, I would probably buy the dip, if that's the right way to say it. Because I do think in the years ahead, we're going to get into this situation where, money's going to flow into the United States. And I think it is going to push stocks higher. I think at that time it'll come I think the next time we have the big push down, I think bonds will go up a lot again. And then that might be it for bonds. At that point, maybe money starts to come out of bonds and goes into equities, not just in the US, but from around the world. Because I think this is ultimately going to culminate in a global sovereign debt and a currency crisis. I think people around the world, are going to start to repudiate government debt. And I think interest rates will rise, not because central banks want them to, but because just people refuse to buy, sovereign bonds anymore. And the central banks will have to buy them all. And I know everybody thinks, well, that's what the Fed is already doing in the United States. And I won't argue that point too much. But we're not the only ones doing it. Japan's been doing it for 25 years. All the new issuance out of Europe, almost all of it's bought by the ECB. And so I think it becomes a relative game. And again, I'm convinced we're going to have a currency crisis. And when that happens, I expect the dollar to be the beneficiary of it.
Yeah, that makes sense. So I know we're running a little short on time, Brent. I really appreciate you hanging out this long. One thing I don't hear you talk about too much, I don't think you get this question. I'm really fascinated to get your take on this, because you're in California right now, if I'm not mistaken. You're in San Francisco, so kind of the belly of the beast. And from a personal standpoint, how do you see this destruction of liberty and freedom, not just in the United States, but really what's going on in California? And how are you hedging your personal bets from a standpoint of freedom and liberty? And do you have a plan B? If so, what is it? Do you think about that stuff?
I do think about that stuff. I think about it a lot. And truth be told, I'm probably behind in my preparations for that. I've thought about it all. I've taken some action towards it, but I haven't full on embraced it yet. Part of the reason is my family is here in California, and this is where my family wants to be right now, and I want to be with my family. So that's part of the reason. The other part is that this is where I've built my business. I have a very good business here, right? And it's becoming easier to do my business from anywhere in the world. But in order to build the business where it is, I kind of needed to be here in San Francisco in California, and it's actually a great place to build this type of a business. But
do you worry about social
but I do work.
unrest?
Yes. Oh, no question. Absolutely. I think that I actually think that I'm going to be able to figure out the financial part of this. Okay. I worry more about figuring out the social aspect of it than anything. I don't think we're on a good trajectory. I think people should have plan Bs. I do think that we're going to have pain in the future. And part of figuring that out, though, is where do you go that isn't going to have those same things, right? And no matter where you go in the world, there's going to be some places that have more freedom than others, and then some. It's different types of freedom. Maybe you go one place and you have a lot of political freedom, but you have no business freedom, or maybe you have a lot of individual liberties, but taxes are high, or maybe you have a lot of like I remember this was years ago. You go to Singapore, there's a lot of business freedom, right? But, I remember was this 20 years ago, somebody threw some gum on the sidewalk and they got caned in public, right?
Oh,
So,
yeah, you can't chew gum there. No, I spent a lot of time there. Yeah,
no, but you notice that, there's all these different things to think about. What kind of freedom are you looking for? What kind of liberty are you looking for? What are your priorities? And then, where do you escape the chaos? If it comes to chaos, where do you go? And my friend, there's a lot of different ideas of where do you go. New Zealand's a popular one, and Uruguay, and Chile maybe, and Switzerland perhaps. And my friend Ned Naylor Leland, he's just a great guy. He works in the gold world from London. I just love him, and he's thought a lot about this kind of stuff. And I was talking to him one time. He said, "Nope, I'm going to Mexico." I said, "Mexico?" He said, "Oh yeah, they're used to chaos. They'll be ready for it." so I thought that was a pretty good answer. But I do think that I'm actually glad you asked this question, because I think it does behoove everybody to think about this stuff and start to plan for it. And one of the things I always say, and this kind of goes to my whole, not exactly to my theory, but the best time to buy insurance is when nobody else is buying it and when you don't think you need it.
Right.
Because when you don't think you need it, you can think clearly. But when the chaos happens, if you're not prepared, when chaos happens, you're probably going to be thinking chaotically. And you never want to make a big decision when you're thinking chaotically, right? So the best time to make these plans is to do it ahead of time. A friend of mine several years ago gave me a very good piece of advice. He said, take a piece of paper, and he said, write down on a piece of paper all of these things that you worry about and what would be a red line for you. If you saw this happen, what's the red line? And write it down now, because when you're in the heat of it, you might not think of it as a red line. But so write it down now. And then in the future, when you see these red lines being crossed, you need to start thinking about it really seriously, right? And I thought that was and it's kind of a way to avoid the whole boiling frog syndrome. I was talking to somebody that day, and they said this is a way to avoid the boiling frog syndrome. I said, "Oh, that's absolutely right," because when you're in the pot of water and they just slowly turn up the heat, you don't really know that you're boiling alive, right? Because it's just these very slow incremental things. But if you write them down ahead of time, and it's kind of a thermometer that shows when the temperature gets past this point, you need to get out of the pot. I think that's probably a good way to think about it.
Yeah, I think so too. So just lastly,
you're way ahead of me on this, by the way. Basically my plan is to come live with you, so I hope you have a lot of.
All right. Well, I'll let you know. I'll make sure I get an extra room. We'll go down there with you. We'll hang out in St. Bart.
Yeah, exactly.
But what does the social unrest look like if, in the United States, more specifically, if the dollar goes to 120 or 140 and creates this destruction that we were talking about earlier in the conversation?
Well, it depends on what happens when the dollar goes to 120 and why it goes to 120. And so let me explain what I mean. If the dollar goes to 120 because assets are collapsing, both in the United States and around the world, and there's just global run on the dollar, then it's probably pretty chaotic. It probably looks very similar to the riots we were seeing over the last year, either for social equality or racial equality, and probably look pretty similar to that. And potentially even political, right? I mean, we could get into the red states versus the blue states type of stuff, that would be really scary. That would probably happen if we were seeing this global collapse in asset prices.
Right.
If the dollar goes to 120, because this crazy theory of mine actually turns out to kind of happen, in which I mean it goes to 120 because people from around the world are melting down, but they're sending their capital here. And as a result, we on a relative basis are looking better than everybody else. And we're getting this dollar's going up because, you were talking about this digital currency and UBI, and, we get this mini boom and the rest of the world wants to invest here, and it pushes the dollar higher as they buy dollars to buy dollar assets. Then maybe the dollar at 110 or 115 isn't this nightmare scenario that everybody thinks it is. It could be. I think it globally will be very bad. I'm not convinced it will initially be bad for the United States, or at least not as bad as many think it is. And so from that perspective, maybe it's not as crazy. But I think you need to prepare for the crazy. You need to be prepared for the worst case scenario. It's always best to, be prepared for the worst, and then everything else, it turns out okay.
Yeah. Well, great way to end it right there, Brent. Fantastic conversation, my friend, as always. For all of my viewers and listeners who want to find out more about what you do, where should they go?
Well, I'm pretty active on Twitter. My handle is at Santiago AU Fund. You can just search for Santiago Capital and come up there as well. Hopefully, I don't offend you. I do get pretty active on there sometimes. Don't take any of it too seriously. It's all in good fun. But people are, I love coming on your show, and I do a number of different podcasts and social media stuff. If you go to YouTube, which is I find this whole thing funny. But if you go to Google or YouTube and you type in Brent Johnson Santiago Capital, you'll get a number of different hits, and you can see a number of different interviews and podcasts that I've done. And you're always welcome to email me. I get a lot of emails, and I'm not always able to respond to all of them, but just Brent@SantiagoCapital.com. Happy to help anybody that I can.
Awesome, buddy. Thanks for your time. Can't wait to do it again.
All right. Hope you have a great holiday season, Christmas, New Year, all that kind of stuff.